Alright, welcome in everyone. In this video here, we're going to be overviewing and backtesting an entire week's worth of data, and we're going to be finding out how many times does my main specific model perform in price on any given day. So it's very, very simple. The four things that we're going to be looking for is, do we have a run on liquidity? Do we have daily bias and market structures reporting? And number three, do we have displacement with a fair value gap, order block, or breaker entry followed by that? Now, the fourth and final piece of this puzzle is, do we have an obvious opposing target? So it's very, very simple. Any given day, we go into it. Do these four things take place? If yes, then there you go. That's when we're taking a trade and we're going to be making money on that day. You go into another day. Let's say these four things do not happen, all four of them. Then obviously we wouldn't be taking a trade on that day. So it could be this easy if you simply make it that easy. And I believe this video will clear some things up for you guys and help you broaden your perspective on what profitable trading really looks like. So let's get right into it. Alright guys, so starting out on the daily chart here, as we always do, because nothing is more important than what the daily draw on liquidity is, we're going to be keying in specifically on this week right here. So we have Monday, Tuesday, Wednesday, Thursday, and Friday. So we're going to be finding out just how many times does this specific model that I explained to you in the short clip before this actually perform versus how many times does it not. So coming into the daily chart, we're going to derive our bias for the week. Coming into it, we understand the previous week has ran down after consolidating, leaving behind these very clear and obvious relative equal highs with all-time high hovering above. So we have a pool of liquidity resting up here and all-time high hovering above that. So anytime you have internal buy-side liquidity within a range and a larger pool of liquidity above that, and the opposing end has already been ran out, and the fact that we came down, took out significant sell side here, this becomes a great deal more high probability. So with this in mind, what's the framework that sets the stage for a run up in this direction? Well, like I said, we dropped down here. We took significant sell side liquidity. Why is this significant? Well, here is going to be our long-term dealing range when looking at the daily chart. We have this low to this high. Price drops down, trades into a very specific and key level, which is going to be that optimal trade entry level. So on a macro scale, we have an optimal trade entry zone with sell side liquidity ran below here. So this is a quarterly previous 3-month low. So that's very, very important. And I can dive deeper in that in other videos, but I won't do that here. But fact of the matter is, we sweep a very key pool of liquidity. We immediately wick back up aggressively, create a swing low, turn away from it, and aggressively expand to the upside, getting relatively close to all-time high, trading away and leaving that intact. So anytime we see this, when price comes up, makes all these highs in close proximity to a higher time frame and higher pool of liquidity, this here is a classic depiction of engineered buy-side liquidity. So this is a classic depiction of market manipulation. So once it drops down, what do people want to do? They want to chase that to the downside. But we know it's dropping down to go up. So this is accumulation, manipulation, distribution above buy-side liquidity. Now, granted, on this week we did not reach buy-side liquidity, but all that matters is we have that bias knowing that it should be directionally higher towards the buy-side liquidity, okay? Now, following this expansion to the upside, we now look at it the same way we looked at it here, just on a smaller scale. So we take this swing low here, not this one, because from this swing low, this is what really created the move. We'll take this to the high, and as you can see, coming into Monday, Friday completes a retracement down below equilibrium. So 50% of the range, we trade below that. That's a discount priced in. And if you look to the left, what do we have? Well, we have this fair value gap. So we're trading down to a key level in a discount. Now, what happens, Friday slams down here. And as soon as this happens, as soon as we come into this new week, what does everyone want to do? Short. But we have to understand where the main liquidity resides. And when we understand that, we know that all this is a retracement to, number one, lull traders in using short, and just to set the stage for this bullish run. So let's look at it. With this fair value gap, more specifically looking to the left side of the chart, you are going to see this one overlapping with it. So with sell side of the curve delivered through this range here, and then buy side delivered through, that is a balanced price range. So when we're bullish and we're trading into a discount, these two factors coming together lead me to believe this thing does not really need to trade any lower than it already did. So we expect retracements within the daily range until we reach what? Discount. Okay, how far into a discount? Well, there's other factors you consider with that, and day of week, week of the month, that type of thing. But where it stands now, we derived our daily draw. So what are we going to be doing when we drop down into the lower time frames? Well, we'll be focusing with this week primarily on long positions. Okay, now with this said, there can be short positions within this week here as well, because when we're bullish, we understand there's two weekly profiles that support strong bullishness throughout the week. And one of them is going to be 70% of the time, the Tuesday will create the low of the week. The other one is Wednesday having that classic retracement, taking out some type of internal range liquidity. And then we have continuation higher for the rest of the week. So with that in mind, let's go ahead and drop down to the hourly chart. That's where we're going to start. And looking at it, right here, we're going to start with Monday. So we'll go Monday, work our way to Tuesday, Wednesday, Thursday, and Friday. So with this in mind, we're going to go ahead and go back to Monday. And we are going to see, do we find this model? So looking at what happened prior to the kill zone that we trade, which is New York session, we go into Monday and we understand that we create a swing low here into that Fairvalue gap that I showed you guys on the daily chart. Do we have a higher swing low to the left? Yes, we do. Do we have a higher swing low to the right? Yes, we do. So what is this? It's an intermittent term low formed at a key daily level. So following this, all we do is build up into bullish price action heading into New York session. So dropping down to the 15-minute time frame, okay, you will find midnight opening. We extend beyond that. Okay, and then we head into the 9:30 opening. This is when the market's open, and this is what I'm looking at. So going into this opening bell here on this Monday, we see price open, ramp up, and slam down. Whenever this happens, what exactly is going to be taking place? What did I tell you guys with the daily time frame? A lot of people, we've been very, very extended to the downside. So coming into Monday, a lot of people would want to try and short this on a bearish continuation. So when price trades up like this and then slams down, a lot of people, and I mean a lot, are going to be trying to short this. And where do their buy stops go? Right above this high here that was created with this 9:30 opening push up. So this here would be a time-based liquidity pool. So once we drop down, offset those who have been profitable buying, we now have that first element that I was looking for. We have a run on sell side liquidity. We have daily bias and market structure supporting. We have an obvious opposing target up here. Now the final piece is, do we have that displacement and entry point? So looking at the 1 minute chart here, we see we ramp down, take the sell side liquidity, and then it's followed by expansion right here. Is there an entry point within this expansion? Absolutely, yes there is. Do we have a Fairvalue gap, order block, or a breaker? Well, right here, this is going to pop out as a Fairvalue gap. Now, you could be asking, well, wait a minute. What if you get this initial expansion and then it drops down, makes a new low, and then it goes higher? Well, guess what? You're just wrong. You're just going to take that initial hit. You take that, you let it take the low, and then look for the next expansion, enter, because you understand daily bias and liquidity. So it becomes easy to navigate. All right, guys, so coming into Tuesday here, you're going to find out that today was primarily bearish. We're bullish on the week, but wait a minute, we're bearish on Tuesday. What did I tell you guys on the daily chart? 70% of the time, we want to see that drop down on Tuesday. If not Tuesday, then Wednesday, to create some type of low to set the stage for the rest of the week to expand to the upside, okay? So looking at it here, we can see we expand to the upside, taking buy side liquidity. What is left behind here? Listen. Anytime I see some type of unsustained run up like this, we just keep making higher lows, higher low, higher low. And I'm bullish. I mean, come on now. That's easy money. I want to see a drop down and I want to see this be offsetted. And then I'd look for bullishness. So in this case here, we have midnight opening and we expand above the buy side liquidity like I mentioned. So with this, off the bat, just off the hourly time frame, we already have 3 boxes checked. We have daily bias supporting, we have a liquidity run, and we have an obvious opposing target in the form of trailed sell stops that be jammed below these lows here. Okay, so let's go ahead and drop down to the 15-minute chart. All right, 15-minute chart, looking at it. Do we have an expansion in the direction of the opposing draw after buy stops have been taken? Yes, we do. Do we have a breaker, order block, or Fairvalue gap within this expansion? Yes, we do. So looking at it, you'll find this Fairvalue gap. All right. And with this, we're actually going to go drop down to the lower time frames. Typically, I'd say, this is all you need. But when it comes down to it, we're short-term traders. And to have a better stop loss, you want to find an entry point out of this 15-minute Fairvalue gap. So we have a key level here. And then we drop down to the lower time frames to find a real sound entry. So let's go down to the 1 minute. So with the 15-minute Fairvalue gap, after this intermittent term high has been formed, after taking buy side liquidity up here, so we have a swing high here, higher swing low to the right, higher swing to the left, and then we displace. We come back into a short-term premium into that 15-minute Fairvalue gap up here. We then have another expansion to the downside, okay, and then we ask ourselves, do we have a Fairvalue gap, a order block, or a breaker entry within this? It's the same exact criteria on here, except it's on a smaller scale, and you're able to have a better, risk management with this entry point. So we had this expansion, and we have another run on liquidity here, so we're taking stops here and here, right? And then we displace. We roll back up. Oh, wait a minute. There's no Fairvalue gap. Yes, there is. Let's go to the 2-minute chart. Okay, it's a matter of scaling through your time frames from 5 the whole way down to the 1 minute. So you're going to take note and find out we ramp right up into this fair value gap here. Now, on a short-term scalping basis, you can simply just look at these lows down here as your obvious target and get covered down there. But when it comes down to it, is we understand that a great deal of sell stops are jammed below this low here from what we saw on the hourly chart. So this right here checks all the boxes. So that's 2 days in a row now that we had the potential to get into the marketplace to follow our plan and make some money. So with this, let's go on to Wednesday. All right, so moving on to Wednesday here. What a day we have here. Lots of volatility, lots of opportunity. Now, lo and behold, to fit that daily profile, what takes place here? Well, from Tuesday's drop down that takes the sell side liquidity with jam stops, what do we do from there? We just consolidate, come up, match this high here. Okay, so what is this doing? We match the high and then we trade away. That automatically is going to be engineered buy side liquidity. So with the extended bearishness and people not having the context of knowing where liquidity is, they're going to try and short this on a continuation and expect it to go into new lows. But we understand all this is doing, this is following the script, right, of a weekly profile. So whenever we see this drop down on Wednesday, we just expect that to be classic manipulation in price to set the stage for that Wednesday classic retracement to then extend higher. So with this bullish bias, we don't expect any type of low to be formed on Thursday typically. Okay, typically we see Wednesday make that low and turn away from it at the very latest. This is like the deadline. Okay, so we're only considering taking long positions today. So once we drop down, what do we have here? We have a discount down candle right here. So we have a key level ran down into. We obviously have a run on stop. So all the internal sell side liquidity for those that were chasing this, kind of unsustained up movement with their stops jammed below. Same thing as Tuesday. We ramp down, offset them, take out all the internal sell stops. We trade into a discount. Okay, so relative to this low to high, we trade down, right down to that 79% optimal trend entry zone and this order block. So checkbox number 1, we have liquidity taken. Does the daily time frame support? Check. Now, do we have an obvious opposing target? Yes, we do, because the market ramps up, trades off, we have these relative equal highs, and we understand where the magnet on price is in the form of that daily draw, okay? Not to mention these clean highs up here. Now, with that, let's go ahead and drop down to the 15-minute time frame. All right, 5-minute chart, the final piece of this puzzle here. Do we have an expansion following the sell side liquidity raid? And do we have an entry point in the form of an order block, fair value gap, or breaker within this? Looking at it here, you can see that we have this initial expansion to the upside. If you're trying to find an entry on the 5-minute time frame, you wouldn't particularly find one here yet, but I see another opportunity. We expand once more, ripping through, opposing a raise, right? So that's even more confirmation than you already needed. Ramps up, trades down to this 5-minute fair value gap here, okay? And this here would be an entry point with market structure supporting. So what I mean by that is we have a swing low here, higher swing low to the left, and a higher swing low to the right. So if you want a high confirmation trade, this is what you'd want to be trading right here, this 5-minute fair value gap, and then you aim for that obvious opposing target. Now, taking our range here, you want to take note of this high down to the low. What you want to be buying in on in your highest probability entry points, okay, that should offer low risk buys, is going to be in this discount zone. So anything in this discount zone relative to our short-term dealing range, this is where you want to focus on buying. Is this second confirmation buy within the discount? Absolutely, yes it is. Now, with this, we're going to go down to the 1-minute chart, and similar to what we saw on the 5-minute, it's the same exact criteria here for the 1 minute. Okay, we drop down, we create a swing low here, higher swing low to the left, higher swing low to the right. We then have expansion, so market structures showing its hand. We have expansion, and then we have this fair value gap down here. This right here would be an entry point on the 1-minute time frame, aiming for that draw. Okay, now granted, you do not need to get the entire draw. Okay, getting simply up above like these highs up here, that's more than enough. But what I'm laying down for you guys is the key context and narrative from the daily all the way down to these lower time frames. Okay, so 2 high probability opportunities here on Wednesday, the best day of the week by far. Now what we're going to do, understanding that Wednesday created that classic retracement and followed the script, what do we expect for Thursday and Friday? Continuation, bullish, until we reach that daily draw. Okay. Heading into Thursday. So, lo and behold, we have that classic expansion to the upside. Now, granted, I already know there's going to be comments coming my way saying, oh, here comes another hindsight trader. But I assure you, I trade this live every single day in my Discord, Monday through Friday. Okay. Now, with that said, do we have that classic continuation bullish? Yes, absolutely we do. So, we see price drop down. Do we have a raid on sell side liquidity? Yes, absolutely we do. So, you're going to take note of these very obvious and clear relatively equal hourly lows. So, we come down and sweep those. And below that, we have this fair value gap here. So whenever we see price in this context, we know that Thursday should create a continuation. This is all we need for the stage to be set for bullish price action. So price drops down, we sweep the liquidity here and trade into this fair value gap. So what are we looking for with this drop down? We're looking for this to be accumulation, manipulation, distribution above, and the direction of that daily draw that I told you. Remember, always reference the daily draw. When you're asking yourself, oh man, is this going to be the reversal? If it hasn't got to the daily key level yet or daily objective, the answer is no. It's going to continuously rip higher should the market allow it and have clean movement. Now that we have the first box checked with the liquidity read, do we have that second box checked? Yes, the daily time frame absolutely supports. Now, once we have this hourly sell side liquidity ran, does market structure support as well? Yes, we create an hourly swing low. Okay, so with that, we now have 2 boxes checked. Do we have a very obvious opposing target? Yes, we do. Look at these relative equal highs left behind here. So whenever it ramps up, slams down, where does everyone's buy stop get jammed above? Right above these highs here, expecting this to be some type of reversal. But we know, informed traders, that this is simply just manipulation for people to put their stops up here. They're taking out willing sellers at a lower price, and from there, they're accumulating that to ramp it above. Okay, so this is a perfect counterparty to ramp it above willing buyers at a higher price. Okay, so with this, let's go ahead and drop down to the lower time frame. Okay, so as you can see here, with that hourly swing low I mentioned, with market structure supporting, we have a swing low here. Higher swing to the left, higher swing to the right. So we have every single box checked but one. Do we have a clear and obvious expansion followed by a sound entry point? Well, I don't see one on the 15-minute chart here, especially with the kill zone that we're working with. It's a little bit shaky here, okay? Now, let's go to the 5-minute chart. Do we see a very obvious and clear expansion with an entry point presented regarding an order block for value gap or breaker? Well, I see one here. Okay, we have this down candle that took sell side liquidity, ramps up, creates a fair value gap. So we have this down close candle with this 5-minute fair value gap inside of it. Okay, so whenever price expands, we leave this behind, we trade down into it once. Now the red flags here, and the hard part about this price action is look how many times it trades down into it. So you compare and contrast the first 3 days that I showed you guys. It's very easy, and everything was there. But then we come into a day like this, and yes, it creates everything. All the boxes are checked, but it comes down, taps it here, comes down again, taps it again. Maybe would have stopped you out here, realistically. Now, once we reach a day like this, the first 3 days they're so great, right? Everything was promising, and then we hit a day like this, and reality sets in, and we realize, oh, wait a minute, not every single strategy is 100% win rate. Okay, so on this here, it comes down, order block for value gap. All the criteria is met. So let's be real. Maybe you bought here, and then it comes down and stops you out on this right here. Okay, so it comes down here again, and this here is a classic depiction of high resistance environment. So this here is more so low probability, especially when we're talking about the New York session, because we have 9:30 over here, kill zone closes at 11, and then the push up that we look for doesn't happen until lunchtime, which typically we don't look to trade anyway. And even that, with the expansion out of lunch, do we have a fair value gap, order block, or breaker entry yielded to us there? No. So this is the type of day where reality sets in. So yes, all boxes were checked, but realistically you may have taken an inevitable loss. But lucky for you, keeping this loss small relative to the large winners that you would have had Monday through Wednesday, right? That's the name of the game. So with this, let's go into the final day of the week, Friday, and see if all 4 boxes are checked. So coming into Friday here, you can see, what do we look for? We're looking for longs. Why? Because we have yet to reach that daily objective. So we're primarily going to be hunting buy positions. So we find the midnight opening. What have we done? Obviously, all we've done is extend to the upside. Now, does this look like sustained price action? Does this look very, very clean on the hourly chart? Not particularly. So what we're going to do here is we're going to drop down to the 15-minute chart. And what you're going to see here is on this Friday, first of all, the first red flag is that we failed to have that run on sell side liquidity. So coming into it, all we do is consolidate. We fail to run the sell side liquidity to check that box to set the stage for our model, right? So the first box is not checked. We don't have that. Okay, so what are the other 3? Do we have daily bias supporting? Yes, we do. Do we have market structure supporting? Not particularly, because all we do is leave behind all these lows in here. No clear intermittent term lows formed here. Okay, now we're going to go down to the lower time frames. Okay, and I'm going to show you what it would have looked like if you're trying to find an entry point. So you look at this right here. So we come into days like Thursday and Friday, and it sets in the reality, and it looks something like this. Okay, lots of back and forth, no real clear direction, and it's just not something that you would want to particularly engage in. So in my opinion, none of the boxes for this day was checked, at least on a high probability basis. And pretty much, when you see this video and you see what we annotated on Monday, Tuesday, Wednesday, everything was great. It was easy. We can easily capitalize on it to make money. But then Thursday and Friday, these are the exact days that people lose themselves. So if you're able to conduct yourself well and properly through the gray area, which would be Thursday and Friday where it's not so clear, and preserve capital, and then you're able to capitalize on Monday, Tuesday, Wednesday, those setups, that right there is profitable trading. You will be set on the correct path, and you will be in that small 10% of successful traders. So I hope you guys got something out of this. Hope you learned something. If you did, drop a like, comment, whatever you got to do. See you guys in the next one.